live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we're coming up on about an hour to go until we wrap up the trade. It's Friday.
Is it?
Friday.
I thought it was Monday.
It's a long weekend.
Oh, you are ready.
It's the start of summer, kind of ish.
Did you get an ice cream
It's
earlier?
ice cream upstairs. That's the official start to summer.
It is. It is
Bloomberg
here.
brings out the ice cream on
Did you get one?
Friday. No, I didn't. Did you have one?
No. It happens right before our program. I don't want to
I know.
eat an ice cream right before.
Dairy is
It's okay. It's all good. Ice cream later.
I wish we could just like put it on the side, put a little freezer here and just hold it.
Hey, ask and you shall receive. Charlie Pellet is on it. We're going to hear from Charlie in just a minute. The S&P
It just
500
might be.
lower, but off its session lows. We'll get an update from Charlie soon. Hey, Apple is dragging the major indices lower. This after President Trump threatened tariffs. Mandeep Singh is going to join us with some details.
Yeah, I was just pulling up the Mag 7, just seeing what was
What do you
going
see?
on. We got 7 names to the downside. Apple's the biggest decliner, but everything's down. Tesla the least, just down about 0.25%, but everything is down across the board. All right, we're going to talk Apple. We're going to also go nuclear. We've got a CEO who says he knows what to do with that nuclear waste. I'm always like, yeah, I get the nuclear. I get how we probably need it. I know outside the U.S. a lot's going on, but what do we do with that waste?
Do you have a yard? We could put it in?
I have a yard.
Yeah, we could put it there.
Small. No, thank you.
No?
No, thank you.
All right, maybe if you drill very, very deep.
No, thank you.
Okay, well, we'll talk about it. Also, a little later in our program, hard to believe it has been 5 years since the murder of George Floyd. The president of the National Urban League stops by to answer the question, has anything changed?
It's a really important question. Hey, folks, let's get a check on the markets for you. We're definitely off our lows on the equity side of things. Let's bring in Charlie Pellet.
Hi, thank you very much. We got 53 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all in the red. The big story surrounding Apple today, potential tariffs down 2.9%. We got the S&P down 23, drop there of 0.4%. The Dow down 132 right now. That is a drop of 0.3%. And NASDAQ lower by 132 points for the NASDAQ Composite Index down 0.7%. The 10-year 4.51% last quoted there, early close for the bond market. The 2-year 3.99%. Spot gold up $70 the ounce, up 2.1%. West Texas Intermediate crude up 0.8%. Wall Street rattled by President Trump's threats to impose aggressive tariffs on the European Union and Apple. Stocks fell. The dollar hit its lowest since 2023. Again, Apple down by 2.9%. As for the economic landscape, Emily Rowland is co-chief investment strategist at JH Investments, and she was interviewed this morning on Bloomberg Surveillance.
You look at the macro backdrop in the United States, growth is holding in. The City Economic Surprise Index is actually perking up. The hard data is coming in positive. We're seeing the opposite happen in Europe as their data is coming in weaker. Growth is struggling overseas, yet you've seen this massive capital rotation out of the U.S. into Europe. We would fade it.
Emily Rowland, a co-chief investment strategist at John Hancock. Just getting word that Boeing has reached a tentative agreement with the U.S. Justice Department that would allow the plane-maker to avoid criminal prosecution for 2 fatal crashes of its 737 MAX jets more than 6 years ago. Boeing down 0.4%. Again, recapping, S&P down 0.4%. Apple now down 2.9% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. You heard Charlie mention Apple down 2.9%. The president threatening to oppose tariffs on Apple and other device makers, including Samsung, to encourage them to move their manufacturing to the U.S. We're going to speak to Mandeep Singh. He's Bloomberg Intelligence Senior Tech Industry Analyst. He joins us from New Jersey. Mandeep, we're going to get to Apple in just a second. We got some breaking news, though, in the last hour about Oracle and NVIDIA. Looks like a big number here. According to the Financial Times, Oracle is set to buy $40 billion of NVIDIA chips for OpenAI U.S. data centers. NVIDIA shares down about 0.7%. Oracle shares on the day today, they were little changed, now down about 0.3%. That's the market reaction to news like this. 40 billion seems like a big number to me. How are you looking at it?
Yeah, I mean, these days, AI infrastructure is what everyone is fixated on. And, you know, given the backdrop from the deals that were signed last week in the Middle East, it looks like everyone is really doubling down around AI infrastructure spend. But Look, the key thing for me here is that OpenAI seems to be decoupling further from Microsoft. Remember, OpenAI and Microsoft really kind of partnered together to deploy this AI infrastructure. OpenAI had the model, Microsoft had the infrastructure. And now what OpenAI seems to be doing is really focusing on opening their own data centers. This is in conjunction with Oracle. They were also doing something in Asia this week, and it looks like they really want to lower their reliance on Microsoft. So that seems to be the bigger theme here.
Oh, that's interesting. Wait, so I'm going to pull up Microsoft. Should Microsoft be worried? Mandeep, I'm just pulling it up on the Bloomberg. Now, all the Mag 7 are down. It's down about 0.5%, so I don't know if there's been any reaction, but should Microsoft be worried?
Not really, no.
Yeah. Should Microsoft be worried? Yeah.
The reason why Microsoft shouldn't be worried is because they have that $13 billion investment, which gave them that 49% stake in OpenAI. So there is that contractual binding. They still have access to OpenAI's models. What's changing here is OpenAI is lowering their reliance on Microsoft Compute. They're going to Oracle, and the Project Stargate initiative doesn't involve Microsoft. So it's really about OpenAI saying, I want more compute, and Microsoft can only give so much compute to them. And Microsoft is fixated more on the inferencing side. And these models have to be trained continuously. So that's where OpenAI is leveraging the likes of Oracle here. And that's why you see that big number, the $40 billion number.
Okay, thanks for clearing that up for us. Now I want to move a little bit to the hardware. And specifically, what we heard from the president today, when it comes to Apple, we've reported quite a bit on the difficulty of actually making these things here in the US, but needless to say, that is what President Trump wants to see. How are you looking at this from the perspective of Bloomberg Intelligence and understanding that somebody's going to have to pay, whether it's Apple doing this in the US, Apple paying tariffs, Apple raising prices? I mean, how are you looking at it?
I think 2 and 3 are more likely. Okay. So Apple will likely have to pay tariffs in this case. So 1/3 of their iPhone shipments are in the US, and they tried to diversify away from China by doing the final assembly in India. Well, it looks like that won't suffice because India is also tariffed, and President Trump doesn't really want Apple to expand in India. So in this case, I think Apple will have no choice but to eat the higher costs or ask their suppliers, Foxconn or someone else, to take part of it, as well as raise prices. So look, with a 25% tariff, we are talking about at least $10 billion in tariff revenue that they may have to pay here for shipping these 70 to 75 million units that they do every year in the US. So $10 billion hit. I mean, they could raise the prices by 15 to 20% to offset that $10 billion, but clearly there is a gross margin impact, and they will have to figure out whether they want to raise prices right away or wait, or really work it out with the administration, which was the case the last time, tariffs were imposed.
So, Mandeep, are you looking at this moment in time for Apple and what's going on with the administration and, kind of as a turn in its business, or just kind of a temporary blip?
I mean, look, Tim Cook had traditionally had a very good relationship with President Trump. So if I had to bet, I would say, the tariffs would be backtracked and Apple would get an exemption. Although for Samsung, I think it will be hard. They may have no choice but to pay tariffs. I mean, I don't see, these companies setting up any assembly plants in the next couple of years. It took them a while to do that in India. And look, they may have to start doing that here in the US as well. But as you know, construction of these plants takes a long time. I mean, we are seeing that even with the data center build out, the Texas build out that's happening. It's going to take 2 to 3 years before, things are fully functional. So an iPhone assembly is even more complicated in terms of supply chain. So from that perspective, even if they lay the groundwork and, construction starts, we're talking about a pretty long timeline before, things actually get assembled here. But clearly they may have to do something because Apple has pledged about $500 billion in investment here in the U.S. It just remains to be seen how it manifests, and I think that's where they may have to do something.
Well, so Mandeep, given the relationship that the president has traditionally had with Tim Cook, we saw what happened in Texas during the first term. President Trump was certainly seemed happy about that. Do you think that Apple is ultimately going to have to pay these tariffs, or the president will somehow reach a deal with Apple? Maybe Apple could potentially say, listen, we're going to do what we can to do this in the U.S. It's going to take years, like you said, Mandeep. In the meantime, can you not put tariffs on us until our facility here is done? And maybe like they can wait it out until the end of the term?
I think so. And look, I think with Abilene, Texas, right now, the data center build out that's happening, everyone can see there is construction going on. If something like that were to start here in the US with Apple, and Apple can do, different types of CapEx investments. So they may just have to show something, and I think that should suffice. But look, right now, this is a negotiation tactic. They really aren't doing this for tariff revenue. I mean, I doubt this is for the $10 billion tariff revenue that they can generate. So it is a negotiation tactic. And I'm sure, given the tariff situation in the last 1 month, if there's one thing we have learned, there will be flexibility in terms of walking that back or doing something that appeases the administration, and they may most likely be open to, rolling back the tariffs.
Right. Apple could make a big investment, like build a big headquarters. Oh, wait, they did that. But they could do something else, right? Like when it comes to capital investments, you can do a lot of different things. Hey, Mandeep, just before we go, though, you cover so much in the tech universe. You understand kind of how it all works, companies to watch, and so on and so forth. But when a company like Apple is singled out by the White House, people sit up and take notice, don't they? And just got about 30 seconds left here.
Absolutely. And I think that's where even the optics of it, assembling the final product here, I don't expect the entire supply chain to move, but just the final steps in terms of getting the product assembled here and packaged, even if it's fully ready, all the components are ready, I think that may be a good starting point, but we'll have to see how they go about it.
All right, we're going to leave it on that note. Hey, listen, thank you so much. As always, have a great weekend. Mandeep Singh, Senior Tech Industry Analyst with our Bloomberg Intelligence team there in New Jersey.
I'm looking at shares of Informatica. They've been halted due to a spike in volatility. They were up 14%. Salesforce said to be in talks to acquire the company.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower. Apple now down by 3%. This Bloomberg Business Flash brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. A down day for the Dow, the S&P, and NASDAQ. Wall Street rattled by President Trump's threats to impose aggressive tariffs on the European Union. With Apple, stocks fell. The dollar hit its lowest level since 2023. S&P today down by 28 points, a drop there of 0.5%. Dow Industrials down 187, a drop there of 0.5. NASDAQ today down 0.8%. 10-year 4.51%, the 2-year 3.99%. Last quoted there, early close for the bond market. Spot gold up $70 the ounce, up 2.1%. West Texas Intermediate crude up 0.8%, 61.71 a barrel. Stocks came off session lows after Treasury Secretary Scott Bessent told Bloomberg he does see more trade deals coming.
We've done a deal with the UK. My sense is over the next couple of weeks we're going to have several large deals announced.
Treasury Secretary Scott Bessent, and you can watch the full conversation on YouTube on the Bloomberg podcast channel. Again, recapping, stocks lower, S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for the update, Charlie. Certainly do appreciate it. Well, you know this if you've been watching or listening to us over the last 90 minutes. President Trump Friday signing orders meant to accelerate the construction of nuclear power plants, including small, untested designs that offer the promise of rapid deployment, but have yet to be built in the U.S. It certainly makes sense, given the increase in demand we are set to see for energy. The question that a lot of people have, though, is what are we going to do with all that nuclear waste? Well, Deep Isolation says we bury it deep underground, and they're working on it. We got Rodney Baltzer with us, CEO of Deep Isolation. He joins us from Plano, Texas. Also with us here in the Bloomberg Interactive Brokers studio is Bloomberg News energy reporter Will Wade. Will, I want to start with you because when you think about waste, what are the things we need to be thinking about?
We need to think about something that is long-term, like really long-term. This stuff is dangerous for centuries, for longer than any of us will be around. So you need to look for a permanent solution, and that's something that we've all been working a lot. Really, Finland is the only country I know of that's got something they've worked on, a deep underground repository for the waste. Everywhere else in the U.S., it pretty much just sits out behind the reactors where they used it.
Yeah. Happy Friday, everybody. If you weren't freaked out. Hey, Ron, let's
just don't go to the reactors. I mean, it's pretty simple.
I mean, it's not like it's radioactive. They're in these like gigantic concrete canisters. I've been there, but
as long as there's no crack or anything, right?
They're designed to last for a really long time, but they just sit out there and take up space. There's been some power plants where they built the power plant, used the power plant, finished the power plant, took it apart, cleaned it up. The only thing left
is a
couple dozen or more of these giant concrete storage canisters just sit there.
All right, that's what Deep Isolation is working on. Rod, come on in on the conversation. Tell us a little bit about what you guys are doing specifically when it comes to nuclear waste, because we know kind of, as Will so well spelled out, what's being done now. How are you guys approaching it, and what can you do differently?
Yeah, thanks for having me on. So Deep Isolation is different. What the world has typically done, like Will said, in Finland, giant mine repositories. They take decades. They're very expensive. Administrations change. They get bogged down in politics, and they're just really hard to implement and really costly. And so Deep Isolation looked around and said, man, directional drilling has really come a long way in the last 20 years. What if we married that with nuclear waste handling that we've been doing for decades as well? Make sure we don't drop anything, make sure we integrate those two really mature technologies, and then we can go deeper, which is safer and extends for those really long periods of time. And
directional drilling, you mean this is basically the same technology we use for fracking, right?
It's the same kind of technology, but we don't frack. So we want that formation to be pristine. We don't want to break that rock open like you do with fracking.
So you still have to find somebody's backyard to put it in. And even if it's deep underground, I get the sense that states, cities, countries still won't want it? Where do you put it?
Yeah, and so that's where it's kind of fascinating. For a mine repository, it had to be centralized, and you pretty much had to take all of the waste from the entire nation. So we were going to put it at Yucca Mountain, Nevada, and Nevada did not want it. But now it's stuck at all these reactors across the U.S. So there's communities that already have it in their backyard. The question is, do you want to keep it up there and just look at it, or do you want to put it safe underground where it would be better disposed of? What we're also seeing is internationally, there's a lot of interest from smaller countries that don't have a lot of nuclear of co-locating this with the reactors, so you don't have to transport it through nuclear neighborhoods or communities.
I still didn't hear, though, where exactly you put it. I know that it's not, Yucca Mountain has not worked out for the last, almost 40 years at this point. It's pretty remarkable that it goes back that far. But where in the U.S. can you put it?
But right now, you can't put it anywhere except Yucca Mountain. There's a the Nuclear Waste Policy Act says thou shalt only dispose of spent fuel at Yucca Mountain, Nevada. So in the U.S., we're stuck. And so I think, as you see, like these executive orders come out, it'd be great to see some of those with nuclear for the waste side and make some progress on it to allow us to look for another site. We can't even look for one yet.
Listen, years ago, 25, 30 years, I'm dating myself, but doing a whole thing about Yucca Mountain, and because people were upset and trying to figure out what do we do with all the waste that's already there. And here we are, how many years later? Will, why is, from your reporting, and then I want to bring Rod back, underground, deep underground, why is that a good solution?
Well, it's pretty safe down there.
Is it?
Yeah, I
so
think
even
so.
like earthquakes, tremors, like none of that stuff is felt there?
You know what? That's actually a better question for Rod. And my question for Rod is, give us a sense, like, how deep are we talking here?
So we're talking about a mile deep. This is about twice as deep as a mine repository. And so Deep Isolation has done a lot of safety calculations and looked at, when you put the waste that deep and, in a generic kind of formation, a shale formation, how long does it take for that to migrate somewhere? Eventually that canister corrodes and that waste goes somewhere. And our calculations show that the peak dose to somebody on the surface would be 1.6 million years into the future and be 1,000 times less than a regulatory limit of 10 millirem. 10 millirem is about a chest x-ray, so 1,000 times less than that is very, very minimal. And it just shows you that much depth, that much rock provides so much safety and a buffer for such a long period of time.
So when we have it in the storage canisters on the surface, the safety comes from the couple of feet of concrete and steel that are protecting it. It sounds like your safety play is we're going to put it so far away that it's not going to bother anyone?
Yeah, ours is the billion tons of rock that's on top of our formation instead of the feet of concrete. And it's nuclear waste is stored safely. It doesn't smell, thank goodness, or people would really be upset about it being just hanging out there. But it's stored safely, and so ours is we can make it permanent. Let's stop spending $2.2 billion a year in the U.S. on storage and do something on the disposal aspect.
Here in New York City, when it gets to the environmental review process, if they want to turn some sort of area that perhaps used to be a factory or a gas station into apartments, there's this remediation process that has to take place because some of what was there over the last 100 or so years has seeped into the ground, and it's become an issue. It's certainly an issue in a large part of Brooklyn right now, for example. How do you ensure that 100 years from now, your solution will still hold? Because really it's untested over that length of time, and the nuclear waste will not have seeped into the area around it or contaminated the groundwater, for example.
Yeah, I mean, we have nuclear facilities that have been open for more than 70 years, storage for more than 60 years. And so we've got some experience with, how do you create the engineering barriers around that? Ours is trying to take that plus the drilling technology and just move it all super deep underground so that it is, nowhere near the surface. So when you're doing that surface testing, this is a mile deeper than that. It's well below any kind of drinking water aquifers or anything else. Just get it out of the biosphere.
So tell us how much work you guys are already doing. And because if it's so good, like, are people queuing up to say, listen, we're going to need you to do this for us? So give us an idea of the business that you're seeing.
Yeah, so what we've done is we've designed a universal canister system. And so this canister will take a spent fuel assembly, whether it's a legacy reactor or some of the new advanced reactors and the new fuel types, and it'll enclose that waste. And that allows us to put it either in a storage or transport container for surface if we need to move that around or store it temporarily, or dispose of it in a mine repository or a borehole deep underground. And so we've actually produced those both in the US and the UK, and we've tested those near surface to make sure that they work. They fit inside the drilling casings. They get handled with oil and gas equipment. We've done corrosion testing and things on these, and so we know they're robust and ready to go. Our customers have told us we need to do a full-size, full-scale at-depth demonstration. We've done a small-scale at-depth and full-size at the surface, but go deep. And so that's our next step, is finding the funding to go do that next step and make progress on this issue.
What's the main barrier you see to actually getting this used? Is it still developing the technology? Is it finding a customer willing to try it? Or I suspect one of the biggest one is getting regulatory approval to let anyone use it.
Yeah, we've got a lot of interest from customers. We see the technology as being pretty mature. We do think it's the first mover and the regulatory aspect alongside that. So, like we said, in the U.S., there's some complications. We do think our technology is probably exported and done internationally first, but we do see that there's openings for that, and that there can be progress made in the next 3 or 4 years.
What does it cost to do this? How expensive is it?
So this is less than half the cost of a mine repository. So it's, general rule of thumb is probably about $1 billion per reactor for spent nuclear fuel disposal as you look at kind of reactor sites, and we're less than half that cost. And so when you're a small country or you're looking at new nuclear or anything and you want to have an economic solution, this is one that you could afford to implement.
One last question I'm also curious, Rod, is how do you keep it safe? Like what's the procedure for checking on it, making sure that once it's built, it continues to be safe? And if there's a problem, is it easy to fix it?
Yeah, so we do build retrievability into our product. So if you found out after the fact that for whatever reason you missed something and it wasn't safe, you could retrieve it and pull it back to the surface. So it is retrievable, it's reversible. Likewise, if new technology came along and you really wanted to reprocess this, you could do that as well. But for us, we also have a lot of monitoring. We've got a lot of patents and IP around monitoring both during operations and post-closure. So what is that temperature, pressure, the radiation like at depth over a long period of time?
Cool stuff. Thank you so much. Rod Balzer, he's CEO of Deep Isolation, and our thanks to Will Wade, also weighing in there, Bloomberg News energy reporter. Thanks to you both.
Hey, some breaking news. Shares of U.S. Steel surged, but they are halted right now. They were as high as 16%. Before they were halted, the president announced his support for a partnership, that's what he calls it, between U.S. Steel and the Japanese firm Nippon Steel, which he said would keep the iconic American firm in the United States. You're listening to and watching Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We do begin with a developing story. President Trump announcing backing for Nippon Steel, U.S. Steel partners. Again, developing story. We'll have more details as they become available. But right now, let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks have pared their tariff-inspired opening losses. The Dow has pared losses to 170 points. S&P still down 24, and NASDAQ is off by 0.7%. The U.S. 10-year is at 4.51%. Gold and oil are in the green, but Bitcoin, that's down by 1.8%. Among the main 11 S&P sectors, leaders were utilities and energy. Tech was under pressure, and leaders to the upside in the Dow, Coca-Cola and Chevron. Well, Apple fell 2.8% after Trump targeted Apple iPhones with a 25% tariff threat. After earnings, Intuit rose 9%, while Deckers Outdoor plunged 20%. And in the tech space, Oracle to buy $40 billion of NVIDIA chips for OpenAI's U.S. data centers. In deal news, Salesforce is said to be in talks to acquire Informatica. And wrapping things up, Trump said that U.S. Steel will remain in America. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Just a little more detail on that U.S. Steel story. The shares are surging now, up by 21%. The ticker there, X. ADRs of Nippon Steel, they're up by 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
What time is it, Carol?
It's just under 18 minutes until we wrap up the trade, not only for this Friday, but for the week overall and ahead of a long holiday weekend. You just heard Charlie and Bill Maloney breaking down the trade. We're just down about 20 points on the S&P 500 with about 18 minutes to go in the trade. 145 to the downside on the Dow Jones Industrial Average, and looking at a decline of about 123 points on the NASDAQ 100. But man, it's not a quiet Friday because all of a sudden we're getting the president backing some kind of partnership between U.S. Steel and Nippon Steel. You see shares of U.S. Steel off and running in a big way. You also had the headline about Salesforce said to be in talks to buy Informatica, and you had Informatica off and running. So,
typically on a day like this, like a lot of people wouldn't be at the office. Sarah Ponsek is.
The investment bankers just want to get done and go home.
I guess. Sarah Ponsek is at the office. She's Senior Vice President and Private Wealth Manager with UBS Private Wealth Management. She joins us from Boca Raton, Florida. Sarah, how do you make sense of an environment where on the one hand you have messages on social media from the President of the United States calling for tariffs on individual firms, Apple, for example, deadlines of June 1st for a trade deal with the European Union, and then you have some serious M&A activity happening as well. It's enough to make your head spin.
It is. Markets and news and tweets don't sleep. That's why the three of us are all at the office today, right?
Yeah, exactly.
Someone's
you know it.
Someone's got to be here.
She knows it.
Someone's got to be here. But no, I think this is the new normal that we are living in. And I don't want to say get used to it, but we've been dealing with this all year long. You know, there's no day where we can say for certain that a headline isn't going to drop or the president isn't going to make news of some sort that's market moving. We see it all the time. And if we think about the environment that we are just sitting in right now, yes, we're heading into the summer. There are a lot of deadlines ahead of us, as you mentioned, Tim, but we're coming off a more than 15+% rally off the S&P 500 ever since the pause in tariffs was announced. So yes, that's fantastic. That's great. But we still need to see proof that there are more permanent deals in the works as it relates to tariffs. And until we know what the end all be all is going to be, we're going to see more days like today. It's just the nature of it.
Hey, listen, I think it's kind of interesting that we've been kind of focusing in the last few minutes just on some of the headlines, Sarah, coming out of one out of it looks like from the White House about President Trump seeming to be supporting a partnership between U.S. Steel and Nippon Steel. And then you also had Salesforce coming out, or we should say a headline about Salesforce said to be interested in buying Informatica. So it's like interesting going into a holiday weekend, but there's just kind of stuff moving. And I just wonder, would Salesforce be willing to do a deal if they were upbeat about the environment? Like when you see things like that from someone like yourself who watches the markets overall and you look for different kinds of metrics, what does that possibly say to you? I know that U.S. Steel thing is a different thing because it involves the White House, but I'm just curious. We also had IPOs this week that actually did okay.
It does make you more optimistic. Think about the first few months of the year. Deal making had essentially shut down. You know, when it comes to acquisitions, M&A, private equity, there wasn't much action because there was so much uncertainty regarding tariffs and business and, you know, what operations could even move forwards. There has been an opening. You know, there's been an opening of the curtains to allow more clarity, which has been allowing some deal making to resume. And, you know, we work with a lot of clients who own businesses who may or may not be thinking about, you know, selling a portion of their business or going through an acquisition. And I would say in the last month alone, it does sound like people are more optimistic that there will be more deal making to be had. So from a markets perspective, yeah, that does make you a little bit more optimistic because it means things are a little bit more business friendly. And, you know, maybe there isn't as much cloudiness or uncertainty on the horizon as there was, you know, as we were entering the month of April.
What are your clients saying when they're calling? Are they calling as much as they were calling when we last spoke to you over concerns about so-called Liberation Day? What are they calling now?
Certainly not. In April, it was multiple conversations every day, without a doubt. Now we're entering the summer. Everyone feels pretty good. We're off a 15% rally. People are going to go on their summer vacations. So I will say it's a little bit quieter. This week in conversations with clients, there were some, you know, questions about the bond market. There were questions about the downgrade of U.S. Treasuries. And I know you guys have probably discussed it on the program too. You know, this isn't new news. They're the third shoe to drop. You know, we're not worried about the U.S. repaying their debts. If anything, if you are an investor who needs an income stream, who's a little bit risk averse, now is only a more opportune time to be buying bonds with yields where they are today versus where they were, you know, just a few months ago. So if you need that income stream, no, you don't want to go all the way towards the end of the yield curve, maybe stay more intermediate duration.
Right.
But now's a good time to be locking in that income stream for yourself.
All right, good stuff. Hey, Sarah, have a great holiday weekend. Sarah Ponczak, she's Senior VP of Private Wealth Manager, with UBS Private Wealth Management, joining us there from Florida. Hey, folks, since we're heading into the close, got about 12 minutes to go, and we've got some headlines that have crossed, you know, really over the last 10, 15 minutes. Just thought we should kind of rehash. First of all, you have seen shares of U.S. Steel kicking up. We did see a trading pause. President Trump announcing his support for partnership between U.S. Steel and Japanese firm Nippon Steel, which he said would keep the iconic American firm in the U.S. He said on Truth Social, the president, that is, I am proud to announce that after much consideration and negotiation, U.S. Steel will remain in America and keep its headquarters in the great city of Pittsburgh. So we will see. We need to know what the particulars are about what this partnership means, because initially we were looking for these two firms essentially to come together, but there was a lot of pushback.
It was a very political issue during the campaign.
Absolutely, absolutely. So what does this actually mean going forward?
Yeah, I want to know the details of this. To what extent is, if at all, Nippon Steel getting any ownership or equity of U.S. Steel? I want to know what Nippon Steel gets out of this. We learned from the president that this, quote, partnership would create at least 70,000 jobs and add $14 billion to the U.S. economy, with the bulk of that investment occurring in the next 14 months. But what happens to ownership of the company? That's what I'm curious about.
Good question. It was just about 4 days ago that Reuters reported that Nippon Steel planned to invest about $14 billion in U.S. Steel if the Trump administration approved the merger of the companies, and that included $4 billion in a new steel mill. Again,
a merger of the companies.
Reuters.
That's if the president approved a merger.
So this is why the particulars will matter. One more headline: Oracle to buy. We mentioned $40 billion of NVIDIA chips for its OpenAI data center, and you have Salesforce said to be looking after buying Informatica. Informatica shares off and rallying in a big way. All right, stick around, folks. We're counting down to the close on this Friday. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, just coming up on, well, just under 7 minutes before we wrap up the trade on this Friday. Really wrap up for the week overall ahead of a long holiday weekend. Interesting to see, we've got markets on the equity side of things just rolling off of their best levels of the session, still down across the board, but they're definitely off their worst levels of the session as well. We're looking at a trade where the S&P 500, we've got most names actually to the downside on this Friday, 333 to the downside, 169 actually gaining ground on this Friday. And, you know, keep in mind that this has been a bit of an interesting week, and we're still continuing to get headlines into the close, but we're down about 2.6% on the S&P 500. So pretty substantial drop, and I don't think we've seen this in a few weeks in terms of this kind of a decline. So again, pulling back a little bit.
Yeah, but deals are happening, Carol. As we went to our set break a little earlier, you were mentioning a few of the deals. The most read story in the last hour is really the president's post to social media about U.S. Steel and the partnership, that what he calls a partnership between Nippon Steel. There was also Salesforce said to be in talks to acquire Informatica. Informatica stock is surging. And then also the news that Oracle is set to buy a large portion of chips from NVIDIA, $40 billion worth.
Got to say, we're chasing this story in particular when we talk about U.S. Steel, because we did see the share price soar as much as 26% to its highest intraday level since 2011, after President Trump said in that post on Truth Social that he backs a planned partnership between the company and Nippon Steel. Earlier, according to our reporting, Nippon Steel's president said the company is in talks with the United States government on a deal. And you got to remember, Nippon Steel had previously proposed paying $55 a share for U.S. Steel, which traded as high as $54 on Friday. So initially, it was about a combination of these two companies. There was a lot of pushback. It became a little bit of a, not a little bit,
very
a
political
big political
issue.
Football. So as Tim has been rightfully pointing out, you know, the devil's in the details. We'll see what this means in terms of a partnership. I mentioned a Reuters story about 4 days ago that talked about Nippon planning to invest $14 billion in U.S. Steel if the Trump administration approved a merger of the companies. And that included investing $4 billion in a new steel mill, again, according to Reuters, citing a document and people familiar with the matter. So we're trying to chase in the details and trying to find out exactly what this means.
Well, some other numbers in the president's statement, including that he said a partnership would create at least 70,000 jobs and add $14 billion to the U.S. economy. I'm curious about those numbers, given that U.S. Steel right now only has 22,000 employees in total.
Yeah.
So how does this deal add more than triple the number of employees that are already at U.S. Steel right now? And what's the time frame there?
I don't know. It's a lot of questions.
That's a lot of jobs. 70,000 jobs?
In terms, yeah. So I don't know. I don't know what this means.
As Joe Doe has reminded us, the steel industry in the U.S. is a lot smaller than it used to be. We talked a lot about this during the campaign, that it was much more of a political issue than it was an issue related to the larger economy, just because of the way that the U.S. economy has evolved and the way that metals and mining, and especially steel, is in the U.S. now.
I think he even said that in terms of national security concerns, it wasn't necessarily as big a deal.
Well,
but
CFIUS was still involved.
But that's what CFIUS is brought into in terms of, is there, a national security issues that need to be concerned. Hey, folks, we're heading to the closing bell on this Friday, and we're still down about 38 points on the S&P 500, down about 0.6%. We're down about almost 0.9% on the NASDAQ 100. We've seen the Mag 7 certainly under pressure today, in particular, Apple, 183 points to the downside on the NASDAQ 100, Tim.
I just can't get over how busy of a Friday afternoon before a 3-day holiday weekend this is.
We're supposed to be mellow.
Yeah.
It ain't that way. No, listen, this is the, kind of environment. And we kicked off the day with, some new tariff threats, particularly on the EU and on Apple. And that certainly set the tone for the trade, although we saw equities coming off, they're off their worst levels of the session. So it's not like the market fell apart, so it's kind of one of those things. Stay tuned. We'll see what happens. Great interview by Scott Bessent. We're going to talk about that with our own David Weston of Wall Street Week. We'll get that in the 4 o'clock hour, but do not go anywhere because, are you ready?
I'm ready.
You ready?
I'm ready.
You ready? We're heading over to our TV colleagues. That's because the closing bell, it starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to that closing bell with a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Master and Tim Stenovic in our radio booth as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Right across the screen here on this Friday afternoon, right across the screen on a weekly basis as well, Carol Master, the volume is light.
Yeah, and I feel like, yeah, absolutely. We're heading into a long holiday weekend, the official, I guess, start to the summer, you might say. So no surprise to see light volume. I think it's interesting, just kind of the headlines, though, the flurry of headlines. No, I thought it's supposed to be nice.
No. It rained earlier, so it's not going to rain.
I saw my weather app. It said Saturday and Sunday is going to be nice.
I heard that, too.
Not nice enough for the beach, but not raining. How's that sound?
Do we have like a weather person here? We need like a Bloomberg.
Yeah,
like
we do.
Zone, like
it's
Willow
not going to rain.
Scott,
That's the weather report.
We have weather people. We have weather people.
All right.
We have weather people.
Yeah,
we are
do.
in a fishbowl.
Correction.
Anyway, it's kind of interesting. I feel like the Salesforce news, Informatica off and running, and then more news out of the White House, maybe about U.S. Steel and Nippon Steel. So, God, it's not quiet, guys.
It's really quiet because it's the Friday before a long weekend, and we know that people don't want to be too long or too short heading into any weekend these days because who knows what the president might say or tweet or post on social media. But maybe people got all their positions cleared on Wednesday when the 20-year bond auction didn't do well, and we saw stocks and bonds tumble. The S&P 500 losing 1.6% that day, and the next day, nothing much really happened.
I just want to point out my app on my iPhone here, Carol, says a high of 62. That's nice.
But does it show rain? She said the rain.
But no rain.
Where was that? Where was your iPhone made?
I don't know. How much is this app going to cost me?
Where was your phone made?
I'm going to hold on to this phone for like the next 20 years.
Oh
All right, we get the closing bells in New York. Let's walk you through them here. Right across the screen, fractional losses across the board. The Dow Jones Industrial Average down about 250 points, or 0.6%. The S&P dropping about 0.7%. It is going to hold, though, right at that 5,800 level, 5,802.83, though it takes a while for these numbers to settle. The NASDAQ Composite lower by about 189 points, or 1% even. And the Russell 2000, that's actually a relative outperformer on the day, only lower by 0.3%.
All right, quick check on the S&P 500, guys. Most names in the index to the downside. We've got 329 names losing ground on this Friday. 172, Scarlett, to the upside.
All right, let's take a look at our IMAP. 11 sectors in the S&P 500. 4 managed to finish higher. Unfortunately, they're all the smaller indexes, so that's why there's a lot of red on that screen. Infotech, communication services, and consumer discretionary. Those are the 3 sectors that the Mag 7 are distributed throughout, and they're down by at least 0.9%. Your better performing sectors, utilities. I heard Alex give them a shout out earlier. What does it say when utilities are the best performing sector on a day like today? A lot of movement to the defensive sectors.
No, I'm sorry. President Trump has signed executive orders on nuclear.
That too. 31 members of the S&P 500 utilities index are higher.
You can hear my snoring? Oh, okay.
Yeah, but there was some fundamental news here. Okay, whatever.
There was fundamental news. I mean, I got to tell you, I was changing my gainers to the last minute. Just ask our producer Meredith, because I was like, wait, can I do this? Can I do this? All right, Constellation Energy. Speaking of stuff out of the White House, you did see nuclear power stocks, thank you guys, soaring. We did see President Trump signing that executive order. So there was expectation, speculation earlier in the day. So a name like Constellation Energy, one of your top performers in the NASDAQ 100.
The one you chose?
Seriously?
Sorry.
Okay. You don't know what? You want to know why? All right. It's up 2% in today's session. Listen to this. Our Bloomberg Intelligence team, here's why I chose that one, noted that Constellation Energy is among the biggest beneficiaries of data center power demand and the Inflation Reduction Act, as it controls more than 20% of U.S. nuclear capacity. Over 85% of its annual generation is supported by nuclear production tax credits. That's why, Romaine.
Take that.
Are you happy?
Yeah.
Okay. So from nuclear to solar we go. First solar, guys, up about 1.3% in today's session. Again, we saw them selling off yesterday. Concerns about the bill, the spending tax bill would roll back clean energy initiatives and support. Well, some coming out today noting that maybe the House bill, some of those clean energy cuts may not actually fly. So, yeah, that going on. Jefferies also raised its price target in First Solar to 157 from 127. First Solar closing above at 158 and change, but again, up 1.3%. 2 quick ads I did late in the day. You had Informatica rising in a big way, up 17% by the close, up as much as 28%. That's after that headline crossed on the Bloomberg. Salesforce said to be in talks to buy Informatica, so that's out there.
Well, that's buy them again, though, right? Remember they tried to do this about a year ago, and then they kind of walked. I think it was Informatica maybe walked away, or I'm not quite sure what happened there. But kind of interesting to see that back on the table.
Yeah, you're right. Okay, good stuff. Good stuff. Good ad, Romaine, there. Nice. Thank you so much for that.
I love when you patronize.
I love to patronize you. And then you'll say President Trump backing what's said to be a partnership, although we don't know exactly what this means, of U.S. Steel and Nippon Steel. And so you have U.S.
Might
Steel
have
up about
different
21%. What?
No. President Trump might have different ideas when he says
Scarlett, can you
partnerships.
stop interrupting Carol, please?
Oh, I value that. Come on.
Scarlett can interrupt me anytime. Just saying. Go ahead, Tim.
Oh, okay. Let's look at shares of Apple. They fell today by 3%. It's actually down for an 8th day in a row. Fell as much as 4% earlier in the session, but managed to close off its lows. The president pressuring Apple to manufacture its iPhones in the U.S. It threatens a tariff of 25% if they don't comply. The supply chain for iPhones are concentrated in China. Moving production to the U.S. would be a very difficult thing to do. Our own Mark Gurman has reported on this extensively. My favorite anecdote that he shared via his reporting was that it would basically be like taking the entire city of Boston and having them stop what they're doing to manufacture iPhones, everybody in the city. That's what the scale is like in different parts of China where they manufacture these products. Down 3% on the day today. Booz Allen Hamilton really fell in today's session. Earlier fell as much as 19.4%, closed down 16.5%. That was the worst close going back to 2017, or worst single day, I should say, going back to 2017. At one point, fell the most ever on record. The company said it's going to cut about 7% of its close to 36,000 person workforce.
Yeah.
This is wild. I didn't know this. They get almost all of their revenue from the U.S. government.
Yeah, I've been following this company for a long time, and it's just, I mean, that's fine, but it's like, why is it that some of the defense contractors and the other tech contractors are doing okay, but this company, which is right in the middle of that sweet spot, it's not like they're just, just selling random stuff. I mean, this is pretty high-tech stuff.
It is, but maybe the concentration of like those defense. Yeah, I don't know. I mean, look, I don't know the answer to this, and I think it caught investors off guard as well, and that's why shares fell so much today. Finally, I do want to end with Salesforce. Carol talked about Informatica shares rising. As soon as we reported that news on the potential acquisition, we did see shares of Salesforce fall today. Fell at the end of the day by 3.6%.
All right, taking a look at the bond market. Today wasn't that interesting, but it's really over the week that we got some real action. So the long end flat on the day. We were selling off a little bit earlier when equities were also trading. We were buying a little bit. Yields were actually lower when equities were selling off, but we reversed that. But the week, quite interesting. 30-year at one point hit the highest since 2007 and breached the cycle high of 5.17%, but then fell back from that. You also saw the 530 curve, the steepest since 2021. So clearly the stressors are going to be felt in that back end.
All right, guys, it's the official start to summer, right? Memorial Day weekend.
Sure.
And it's
like 40 degrees, but whatever.
All right. Put a sweater on. Hey, but it's also the official start to kind of the summer blockbusters, and the Mission Impossible series has got a new movie coming out. It's already out and hitting theaters today.
Have you seen this, Alex?
No, I literally bought my tickets while you guys were doing winners and losers.
Well, apparently there's a line in the movie about...
She's actually not lying.
I'm literally not lying.
Rude.
All right, so there's a line in the movie about giving, I guess, Tom Cruise, his character, an aircraft carrier, and it turns out the U.S. Navy and Air Force Special Operations actually gave him an aircraft carrier and the team to actually film on.
Nothing new when it comes to sort of the marriage between Hollywood or the government's support of Hollywood. The Pentagon has a long history of being a supporting character. Famously, the Hunt for Red October going back to 1990.
Great movie.
Top Gun.
That was a huge
Top Gun
one.
2, which is, the Return of Maverick.
I think it's the 31st anniversary of Top Gun this month, by the way.
Really?
I believe, yeah.
Feeling
I got
old.
my math right.
Yeah, I know. Pirates of the Caribbean.
Really? Wait, what?
Really?
What? Wow, that didn't do anything.
Right.
Little Mermaid.
That landed not so well.
What was that promoting?
Wait, the Pentagon, the U.S. military played a role in...
I mean, there were ships
No, I
involved,
thought we were
right?
talking
I don't know.
I thought we were talking about Memorial Day movies.
Oh, okay. No, you're too busy buying your tickets. You got to pay attention.
That was
Are we all going to go see Mission Impossible? Who saw it? You saw it, Scarlett?
I saw the first.
I saw part one, but half of part one, up until the point where they start explaining things. Then I lost interest.
Mission Impossible?
This actually tracks for me.
Okay, what about like parts, the other parts?
Oh, no. Part one of the latest version, Dead Reckoning. This is part two of Dead
Clearly,
Reckoning.
Romaine has not seen it.
He doesn't know
I don't
what
know
we're
what's.
talking
I have
I've
no
seen it
idea
a
what's
million
going on.
times.
Oh, okay.
Yes.
Sorry.
I'm going to go see it
derailed this
tomorrow.
conversation.
Tomorrow at 3. You definitely did. Tomorrow at 3 and things.
Anybody else go to the movie?
But which part? Is it part 1 or part 2?
Part 2. This
This
is
is
the
part
end.
2.
This is the for real final
But I
reckoning.
haven't seen part 1.
Then you can't go.
All right, this
You know
is like
what?
who's on first.
Ethan
Yeah,
Hunt will save the day.
We're never going to get
Sorry,
out of
spoiler
this.
alert.
All right, good
Yeah,
luck
we
at the
don't know if
movies,
that's true.
Alex. Tell
feel
us.
left out.
She can report back on Monday. All right, guys, have a good and
Go see
safe
Lilo
weekend.
and Stitch Part 6.
Have a good and safe
What
cold
happened
weekend.
to,
All right, you're
Leonard
done.
Part
You're so done. You're
1
so
through 5?
done. That's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Alex is heading out to the movies or somewhere else. And of course, Romaine and Scarlett finishing up on TV. Tim and I right here on Bloomberg Business Week Daily. Guys, see you on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
David's going to save us. Or bring us back to Earth.
I was trying to forget about what happened just now.
I know you were.
Do a little reset.
You know
count on
me.
Carol Master to
I go right to the flame.
Bring it back around. Well, Treasury Secretary Scott Bessent said there could be, quote, several large trade deals announced in the next couple of weeks. He added that he expects the Trump administration officials will meet with their Chinese counterparts again in person to negotiate those tariffs. This was just one of the many bits of news made in David Weston's interview from earlier today with the Treasury Secretary. Joining us now for more and for a preview of Bloomberg Wall Street Week, which airs tonight at 6 p.m. Wall Street time on Bloomberg Radio and Television, is Bloomberg News anchor David Weston. He joins us here in the Bloomberg Interactive Brokers studio. You guys covered a lot of ground today.
Yeah, we did. We had a solid half hour, 32 minutes or something with him, which was great.
Before we get to what was covered, I'm just curious, in your view, you've spent many years working in media, in management, as an executive, now on the side of the person actually asking the questions on TV. What's the media strategy with him getting out there so much?
I don't know. He hasn't told me that. So now I'll speculate, which is what we do, right?
That's really what I'm asking you to do.
But I think as often happens in an administration, you start with the head, the president. And President Trump likes the media and likes television. He is, I think, the most gifted reality show television producer of all time.
You're talking about the president?
The President Trump. He likes this. He likes it for himself, and he likes it for people around him, too. He likes to see his people up there, and likes to watch them on TV, and likes them out there explaining what's going on. And, you know, he is willing to take risks, and he's willing for his people to take risks. Now, as I say, that's speculating on my part, but that seems consistent with what we're watching. There's no shortage of exposure of senior administration officials.
I always think about, though, when we see the Treasury Secretary, like he has really become, though, I feel like the go-to voice when it comes to a lot of important policies now in the Trump administration, especially when it comes to tariffs and markets and market reaction
Well,
at this
certainly
point.
for us here and in Wall Street, just to drop names here, I was with Ray Dalio for a fair amount yesterday. We did a thing at the Paley Center.
Right.
And we talked about Scott Bessent, whom he knows well. And he said something that you hear, I think, a lot on Wall Street is, we are very fortunate to have him there. We on Wall Street in the business community, because he's a grown up in the room. He knows the markets. He's a sophisticated, smart person. And so it's good to have him in the room with his influence. I think that a lot of people on Wall Street feel that way about Scott Bessent.
Well, I thought it was interesting then when he was kind of, in some of the comments that he said about the bond markets kind of got it wrong.
Yeah, well, he's pushing back against the bond market. That's exactly right, which is ironic given how much time he spent dealing with the bond market, right? But that's one of the questions. I mean, a lot of the interview on purpose was about this big, beautiful bill that they have.
Right.
And the bond market reaction to it, because he sees this bill as the first step in really a renaissance of the U.S. economy, and that we're going to have a lot of growth and we're going to get the deficit down. And obviously, that bill by itself is pointing in the wrong direction of the deficit. It's 7% of GDP. His goal is getting down with a 3 starting it. And so part of the question was, what's that about? And the bond market did not react very favorably to this week.
No.
But he basically is saying, yeah, they don't quite understand the whole thing, and there are parts that people are not taking into account. That's his point of view.
Which parts?
Well, he thinks that the growth is being way underestimated.
I saw that 3% target.
He did. He said 3%. By next year, we'll be hitting 3% comfortably.
Yeah.
Which is pretty aggressive given where we are with GDP growth right now.
Right.
But he believes that's coming in part because of deregulation that he thinks will kick in by the 3rd or 4th quarter. That will really help us a lot. And he thinks we don't understand what's going to be done with prescription drug prices, which will get prices down, and also the tariffs. He said we're not fully accounting for the tariffs and the money that we'll end up making off of these tariffs. And I asked him, I tried to pin him down on, are the tariffs a revenue source or a negotiating tool?
Great question.
And he kind of said both. He said we're going to get money off of them, but we're also going to persuade people to do business a different way. So.
There's one thing you guys got into too, and this has to do with banks.
Yeah, it's kind of obscure, but it was relevant in this sense, I think, at least I thought it was.
Yeah.
Which is a lot of discussion was what's going on with the yield on the 10-year and the 30-year for that matter, the yield on the 10-year, which is up, which is not where they want it to be. And I was asking him, okay, if you can't get it down, what sorts of tools could you have? And so I went into what I think is a fairly obscure area, the supplementary leverage ratio.
I did a little Googling to understand.
Well, Secretary Besson has quite specifically said he wants to be setting the agenda on certain bank regulatory things that normally you'd think would be up to the Fed. He's going to play a much more active role, and he believes that, in fact, by really addressing that supplementary leverage ratio, because what that would mean is it would make it easier, more attractive for large banks to hold more treasuries. So that means there are more buyers for treasuries, and when you have more buyers, then the price goes up and the yield goes down, and then that can help us a fair amount. So this is part of what he had to say on that subject.
Banks are being penalized for holding treasuries. You know, there's a large supplementary leverage charge. So I think for holding the risk-free asset, we can reduce that. And, you know, I've seen estimates that it could bring yields down by tens of basis points. Certainly during the COVID crisis, it was temporarily taken off, and it had a big effect.
Let me ask something different, but I think might be related, which is stablecoin. If really we went big into stablecoin in this country, what effect could that have on the strength of the dollar? Because people might have to hold dollars in order to match against it, or even for treasuries.
Well, we are going big on digital assets. So Trump administration has made digital assets a priority. Past administration starved and almost made extinct a lot of these companies and pushed it offshore. So what we want to do is apply the highest U.S. regulatory and AML standards to digital assets, especially stable coins. And you know, I've seen estimates that just over the short term, stable coins could create $2 trillion of demand for U.S. Treasuries and Treasury bills. To put that in context, the number is probably about $300 billion right now.
There are reports, including on Bloomberg, that there may be, if I can call it, privatization of Fannie Mae and Freddie Mac, something that's been talked about since I think they were nationalized, essentially, during the great financial crisis. I heard the president say, I'm going to ask Scott Bessent about this. So has he asked you, and where does that stand?
It is a goal for this administration. You know, again, we're doing peace deals, tax deals, trade deals. So as we land some of those deals, then we will focus on that. But David, what I can tell you, we are doing a great deal of studying at Treasury, because the one requirement for this privatization is that they are privatized in such a way that mortgage spreads do not widen. And in fact, is there a way that we can make the spread between the risk-free rate and mortgages tighten as the Fannie and Freddie are privatized?
That was exactly my question. So do you know the answer to the question? Is there a way to do that? Because most people are concerned that will drive up mortgage rates.
Sure, there are several ways to do it, and we're exploring it. So we will move forward, again, you know, after we land some of the peace deals, trade deals, and tax deals, then we will work on this privatization deal.
So there you heard Secretary of the Treasury, I would say, riding the horse in two different directions. Yeah, let's get the yields down by having stablecoin and having the banks hold more treasuries. The concern with the Fannie Mae and Freddie Mac is it will go the other way, because people will demand more money if they don't think there's a guarantee from the federal government. I don't want to speak for the Secretary. What I heard there is don't hold your breath. We got a ways to go before they really do spin off Fannie Mae and Freddie Mac.
Just before we let you go, I know a good portion of the program is dedicated, about half of the program is dedicated to your conversation with the Treasury Secretary earlier, you're also touching on stakeholder capitalism on the program tonight. And a large privately held company that's been in family control for a long time.
It's a fascinating company, the Mars company.
Yeah.
It's fascinating. We talked with one of the great-granddaughters of the original Mars about what they've done as a family to write down their principles, because now there are no Mars family members still in management. They are the board, and they still run the place as the board, but there are no members in management, senior management now at Mars. So they've written down the principles that go way back, 140 years or something like that, to really make sure that people, and they say that they really abide by those principles as they make day-to-day business decisions.
But it's important, right, to kind of pass it on to remind everybody, like the core of what it's all about. David Weston, thank you as always. Really appreciate it. David Weston, host of Bloomberg Wall Street Week. Catch it at 6 p.m. Wall Street time, both on Bloomberg Radio and Bloomberg Television.
Well, another story that we are following today is what's happening with U.S. Steel. It's ticker X, and shares surged higher by they're higher now by 23%. They closed higher by 21.2% today. The president backing a partnership between U.S. Steel and Japan's Nippon Steel, crediting his tariff policies for an investment that would keep the firm in the U.S. Well, the president appeared to stop short of endorsing Nippon Steel's proposed $14.1 billion takeover of U.S. Steel. Shares of the American steelmaker surged as much as 26% on apparent optimism over the deal's prospects.
Yeah, absolutely. No doubt about it. You know, think about the last year or so, how much time we have spent talking about a possible link-up merger, some kind of acquisition between U.S. Steel and Nippon Steel. It became somewhat of a political football in terms of them coming back. CFIUS coming in, national security concerns, a lot going on here. But again, to see this coming on this late Friday afternoon that the president is backing it, they talk about a partnership, and we're trying to understand exactly what that means. If it's not an actual acquisition or merger deal, most link-ups between two companies are not mergers. There tend to be one acquiring the other. But if that's not it, what exactly is that partnership? What kind of money is exchanged between the two? How does it all work out? And so what kind of entity is it going forward? So I think there's a lot to be determined. But having said that, investors bought into it because, man, they just sent shares of U.S. Steel, as Tim mentioned, up as much as almost 26% intraday when that headline crossed, but finishing the day with a gain of about 21%.
My interpretation of that is investors are bullish on some sort of takeover by Nippon Steel. As Joe Doe wrote, well, Trump appeared to stop short from endorsing Nippon Steel's proposed $14.1 billion takeover of U.S. Steel. Shares of the American steelmaker surged as much as 26% on apparent optimism over the deal's prospects. The president noted, my tariff policies will ensure that steel will once again be forever made in America. It doesn't necessarily mean, though, and look, this is just, I'm trying to understand details here. We don't have the details of this.
No.
Just because something is made in America doesn't necessarily mean it's owned by an American firm 100%.
Yeah, and I guess I would go back to some of the things that, President Trump said on the campaign trail. I mean, his whole thing about, keeping jobs in the United States, investing in the United States. So, does this potentially, whatever this partnership means, is it more investment in the United States? Does it create jobs? I mean, again, these are things that we need to know. We know the president did say that this partnership between the two would create at least 70,000 jobs and add $14 billion to the U.S. economy, with most of the investment occurring in the next 14 months. We know any kind of build out tends to take some time. So, this is where reporting and understanding exactly what this partnership means and what could be the implications, certainly when it comes to the U.S. economy.
U.S. Steel currently has 22,000 employees. Once again, the president saying it would create at least 70,000 jobs in the U.S. I do want to bring in Richard Bork, Bloomberg Intelligence senior analyst for Basic Materials. He joins us on the phone from New Jersey. Richard, I know there are still a lot of questions, maybe more questions than answered about this so-called partnership, but what exactly does it look like to you?
Okay, well, from the stock market reaction, it looks like people are, definitely the U.S. Steel shareholders are expecting to get paid $55 a share. The planned part, the language in the tweet is planned partnership, so I'm kind of questioning that. If I was a holder of the stock, I'd be skeptical that it's going to go through. But at any rate, a partnership or a full takeover definitely changes the competitive landscape of the U.S. steel industry. Definitely Nippon, the world's third largest steel maker, and financial strength, can, support U.S. Steel. U.S. Steel needs a lot of capital spending to bring its assets up to par to compete against Nucor and Steel Dynamics. And from the various investments that we've seen outlined and things like that, it looks like it definitely makes the industry more competitive. And I think the stock market reactions of the peers kind of confirm that too. You've seen Nucor and Steel Dynamics and Cliffs stock prices all go down after this, tweet was made.
Yeah, it's interesting. As Tim mentioned, our own Joe Doe also reporting this out. We had Reuters a few days ago also talking about investments by Nippon Steel. Dow Jones also reporting that Nippon has roughly doubled its spending plans in recent days, pledging at least $11 billion in U.S. Steel's plants by 2028 amid this negotiation process that kickstarted earlier this week, and that the company has also pledged, Nippon Steel that is, to build a brand new mill, which would bring the total to about $14 billion in terms of investment in the United States. Is this a win for the president? Is this a win for the U.S. steel industry, domestically produced? Is this a win for U.S. jobs?
I think... it definitely strengthens U.S. Steel. If they had not got this deal to go through, most likely Mon Valley would be closed, and it would, you would see jobs lost. The union would lose jobs there because Mon Valley's a unionized plant. If you kind of take a step back and look at the U.S. steel industry, we consume about 100 million tons of steel each year, but we only make 80 million tons. So the extent that, Nippon Steel can come in and, add some capacity, there's room for it to grow. And that's why the market's kind of attractive to Nippon to come in. They can kind of displace the imports with higher quality, better steel.
As we mentioned, CFIUS review is part of this process for this so-called partnership. That's the president's words. Once again, a partnership. I'm interested in the details of what Nippon Steel gets out of so-called partnerships such as this, and maybe we'll get the answers in the coming hours or in the coming days or when the deal is finalized. We know the president is set to appear at an event, he did mention in his message. But from a national security perspective, what do we need to understand about U.S. Steel and the steel industry?
Japan's the leading foreign direct investor in the U.S. So I think the whole security concern was kind of overblown. The bigger question is, I find it hard to believe that Nippon Steel is going to pay $14.9 billion to the shareholders, then invest another $14 billion. So that's why I'm kind of skeptical that, and also the language doesn't say an acquisition, it says partnership. So I'm kind of skeptical that it's going to be a partnership, an outright acquisition where the shareholders should expect to get paid $55.
Yeah.
The other thing is Nippon Steel in the past had said they wouldn't, they want, majority control. And, again, the old saying that the devil's in the details, it's definitely going to be interesting to figure out what's going on. As a longtime security analyst, it's hard to read tweets rather than read documents.
Yeah.
And signed off by the SEC and blessed and things like that. So,
well, it's funny that you say that. I'm kind of looking for some kind of official filing or document. I haven't seen anything. You did mention, though, we know U.S. Steel shares rallying, I think, more than 20% in today's session. But you did mention some of the others in the industry. Nucor finished the day down about 2%, not at its lows, but nonetheless 2% lower. But Cleveland Cliffs, which is a steel producer, that stock finishing near its lows of the day, and that was down about 7% as a result of these headlines. Richard, really appreciate it. I feel like, as we said, we're going to wait for some more details to understand exactly what this partnership is about and whether or not it is ultimately some kind of merger or really realistically some kind of acquisition between the two. But we'll wait to see that. Richard, thank you so much. Richard Bork, he's Bloomberg Intelligence Senior Analyst for Basic Materials, joining us here on Bloomberg Business Week Daily. Again, shares of U.S. Steel finishing up about 21% a share. And we're looking at the stock closing at $52 essentially a share.
Well, it is the 5-year anniversary of George Floyd's killing. That happens this Sunday. That's the anniversary. Hard to believe that. Since then, we've seen a pendulum, I think it's fair to say, swing back and forth. When it comes to the way companies talk publicly about race, when it comes to the way that we hear administrations talk about it, the National Urban League is out with a new report, and we're joined by Mark Morial, President and CEO of the National Urban League. It calls itself, quote, the nation's largest historic civil rights and urban advocacy organization devoted to empowering communities and changing lives since 1910. Mark joins us here in the Bloomberg Interactive Brokers studio. Mark, welcome.
Hey, I'm glad to be here. And, you know, I want to take a minute, if you will, to talk about U.S. Steel.
Oh, please.
Because we took a position against this transaction. And I think people should be reminded that both Biden and Trump, during the election cycle, opposed what, in effect, was an acquisition by Nippon Steel of U.S. Steel. Cleveland Cliffs wanted to buy U.S. Steel.
Right.
Both Biden and Trump opposed it on the theory that it would lead to the loss of American jobs. The fear being that Nippon would close American plants, transfer production to Japan. So now with this iteration, you asked the right question. Is this a partnership, or is that a public relations move? Is it still the original deal, which really was an acquisition? And what protections are going to be there? We took a position from a jobs perspective. So
you were concerned about some of the black communities there, right? In
Gary,
terms of the
Indiana, and a number of
impact.
other places, and steel, and we're in a conversation where we're talking about manufacturing. So the real impact question is, will this protect American steel jobs, or will it potentially lead to the transfer of production to Japan?
Well, I will say the president said that it would create at least 70,000 jobs and add $14 billion to the U.S. economy. But as we did just hear from Richard Bork, he has a hard time imagining that after investing $14 billion, then Nippon Steel would add an additional $14 billion to the U.S. economy.
And the question is, are there any guarantees? And I think we all need to watch for the details, understand the specifics, because those jobs and those communities have been heavily dependent on those types of jobs.
Well, just to contextualize the 70,000, that's just a massive number of jobs, especially for the steel industry. U.S. Steel only has 22,000 employees right now.
Yeah, and I hope it's not a lot of hype, you know, and I think that we owe it to look at the transaction and see what impact it'll have, what guarantees are going to be there for American workers, and what are the guarantees that 5 years from now, there's not a decision made, a reversal, and the jobs move to Japan or they move abroad for some reason. So that's really what, if you will, handcuffs and guardrails are going to be placed on this transaction. Till we see what they file, until we see what they promise, it's hard to know. But it's interesting that the president opposed it as a candidate. Biden opposed it as a candidate. The union opposed it as a candidate. Union opposed it last year.
Right.
And there was an American suitor for U.S. Steel, Cleveland Cliffs, right? So there's a lot to unpack here. And I just, you know, we work hard on the issue of jobs.
Right.
And we're very focused on transactions to determine whether it's going to have a positive or negative impact on the communities we serve.
Well, look,
you want to talk George Floyd?
Well, wait,
I do want to in a minute.
Yeah, right.
I want to stay with this for a moment.
Stay on economic
Cool.
development and stay on jobs, because as somebody who's been involved in government for so long, mayor of New Orleans, serving in the Louisiana State Senate, you understand this stuff. When it comes to economic development, take a big picture approach to what you view as the economic policy of the Trump administration and its effects on American jobs, because the president and the administration would say, hey, we are imposing tariffs to protect U.S. jobs.
I think a tariff approach without an industrial policy, which says what specific industries are you trying to grow? It appears to be a scattershot approach designed to leverage some deals without any specificity. So we're talking about iPhones, automobiles, blue jeans, toys. What specific? So I can buy the selective use of tariffs, the selective use of trying to rebuild an American industry, but you need an industrial or economic development policy that matches the tariffs in order to give certainty to American business and consumers.
So I am curious, Mark, when the president putting pressure on a company like Apple to kind of increase its investment here, and we've talked a lot with our reporters who cover it and our team that covers it, that they say, it's going to be a while before we can do it, that maybe there isn't the skill of the workers, the type of automation, so on and so forth. But is that the kind of thing that you think would create jobs that would actually benefit Black communities, middle-class communities, which we have just kind of carved out in a big way?
Look, the outsourcing of jobs that took place in the 80s and the 90s to really Reagan-era free trade policies, which were continued in the Bush and the Clinton era.
Republicans, Democrats alike, yeah.
Communities, right? They did damage communities. The benefit was cheaper goods on the consumer side.
Right.
So there were some benefits, but it hurt. The issue today is what jobs are the jobs of the future? Is it rebuilding automobile component parts? I would say that what people have not paid attention to is the disinvestment through the NIH cuts in biomedical research and technology, where we do have a bit of a competitive advantage, where we ought to be pouring more investments into that.
What's the impact of that from your view?
Well, the impact of that is long-term damaging, because what happens is the scientists and the investments go abroad. And once they go abroad, just like manufacturing, you can't get them back. So our economic policy ought to be focused on where do we have a bit of some tailwinds and how can we grow it? But then on manufacturing, I agree with the notion that we ought to try to rebuild manufacturing, but we need to be more specific about it. If someone said, I want to bring jobs to Detroit, Newark, Gary, New Orleans, Atlanta, I'm all for it, but I need some specificity as to how this policy is going to generate that type of response.
Are you getting time at the White House?
We've not been in any direct discussions with anyone in the administration, but as always, if it's about the benefit for the community, I'm open to discussions with anyone.
Is that different than other administrations? Do you typically have a direct line to the White House?
In the Clinton, the Bush, the Obama administrations, the Biden administrations, I think there was a much more candid, open working relationship with civil rights leaders, with African-American leaders, and they were frank and candid, and they were not performative. You see, many of these meetings took place without cameras, without press, without performance, without posturing. So, I mean, my view of meetings is I want to talk business. I don't want to play games.
What's interesting is the communities that you represent at the National Urban League in the last election moved further to the right for the most part. And I don't want to paint every community with a broad brush.
And many didn't vote. And there was a cynicism about whether government could make a difference. And
why was that?
I think that people's objective economic conditions, the difficulty of COVID, the depression of wages, inflation, a whole host of factors, and the idea that politicians come and go and make promises and never keep them.
So how does the Democratic Party get these voters back?
It's going to be up to a specific candidate. I think people will rally around the right person. I don't know if it's so much about a party. Think Trump, right? Trump remade, quote unquote, the Republican Party. I think the Democratic Party is, the Democratic coalition is poised for a makeover. It's poised for a group of people who are going to come and talk about how they're going to change and disrupt, but build a vision for the future.
So who are some names that are on your mind?
I wouldn't offer any names now, because right now the horses have not gotten out of the stable. So we got to see them on the practice track.
Well, was Kamala Harris the wrong candidate at the wrong time?
I thought she was a good candidate. She was given a tough lane to run in. 60 to 90 days to get known amongst the American people. But remember, she came within 1 point of defeating someone who was on their third run for president. So we got to remember, there was no landslide, there was no mandate,
right?
But there was a victory for Donald Trump.
So I would love to say, speaking of victories, that we've made a lot of progress in the last 5 years, considering the tragic killing of George Floyd. And I think, you know, it was COVID, we were all home. We had a lot of conversations, really frank and real, with CEOs and leaders about the importance and the racism that still is in this country, and Blacks being targeted around the country, and just the injustices. And I feel like we've slided back. Tell me how you see it.
5 steps forward and 3 steps back. On 2 issues we cover in this report, I encourage people to go to NUA.org.
You guys have a report out, yes.
On policing, many communities, many police departments, many cities, supported by the Civil Rights Division of the Justice Department, made strides. We didn't pass a comprehensive federal law. The George Floyd law did not pass, but 180 police officers were in fact convicted. Dozens of police departments ended up in agreements to reform themselves. A number of states like Maryland passed statewide police reform measures. That was good. Now, what's the obstacle now? The current administration has walked in and said, we're freezing all civil rights investigations, regardless of merit, regardless of the basis of those. That puts headwinds into this effort to continue to do reform. On the other hand, there were these incredible commitments by many great American institutions, businesses, philanthropies, et cetera, and now some are walking them back. And there are 3 categories: those that have just abandoned them, some who've held firm, and those that are making cosmetic changes because they know they need to be committed, but they're under the pressure of the administration, which is using its regulatory power to force their hand.
Do you think, which one do you think happened more? Do you think these are just cosmetic changes and they're committed to these so-called DEI policies? Or do you think they are actually making fundamental changes and moving away from them? And look,
I
it
would
depends on the company,
encourage
obviously,
American business to demonstrate a sense of courage. And the reason why that courage is important is to recognize the marketplace for both employees and customers of the future, which is becoming far more diverse. Black, brown, Asian, women. That's the workplace of the future. The customers of the future. I mean, you've seen Target get really, really hammered, right? And they had an incredible record. They've walked it back. Now, they'll tell you, no, the changes we made were really around the edges. But people today, if you look at DE&I, diversity, equity, and inclusion, equal opportunity, and you poll it, the lowest polling numbers I've seen in any publicly available poll is 50%. See, the American people are not on the side of the loud anti-voices. American business knows deep in their soul, they know and they understand, but they're being, I think, pressured. They're being intimidated. And I think that's just the reality of today.
We're squeezed for time, 25 seconds. Are you surprised by the fear of corporate leaders to speak out? And I apologize that it needs to be quick.
I am, but there are exceptions. Jamie Dimon, Roger Goodell, 2 people with whom I've spoken and 2 people who've made important statements. And I think others should do the same thing.
Are you done with public service?
Never done with public service.
So is there a chance you would run for something else?
There's always a chance. But I love my job. I love what I do, but there's always a chance.
Like what?
Stay tuned.
All right, TBD. We'll come back and tell us. You can break it. Mark, thank you so much. He's, of course, President and Chief Executive Officer of the National Urban League, joining us in studio. Mark, thank you.
Hey, let's get back to Charlie Pellet. He's had his eye on everything happening after hours. Say there, Charlie.
Well, hello there, and here's what's going on. Wall Street rattled today by President Trump's threats to impose aggressive tariffs on the European Union and Apple, causing stocks to fall, the dollar to hit its lowest level since December of 2023. Right to the numbers here, with the S&P wrapping up the week, heading into a long holiday weekend at 58.02, down 39 points today, a drop there of 0.7%. Dow Industrials down 256, decline there of 0.6%. Nasdaq down 188, a decline of 1%. Apple, by the way, today lower by 3%. The 10-year 4.51%, the 2-year 3.99%. Early close for the bond market today, last quoted there. Spot gold up $63 the ounce, up 1.9%. West Texas Intermediate crude up 0.8%. And Bitcoin now at 108,000, retreating further from a record, falling today by 2.4%. To be clear, Bitcoin at 108,465. Sarah Ponzik is Senior Vice President and Financial Advisor with UBS Private Wealth Management. And right here on Bloomberg Business Week Daily, she told us the rapid-fire news flow isn't going away.
This is the new normal that we are living in. And I don't want to say get used to it, but we've been dealing with this all year long. You know, there's no day where we can say for certain that a headline isn't going to drop or the president isn't going to make news of some sort that's market moving. We see it all the time.
Sarah Ponzik of UBS. And speaking of which, President Trump announced today that U.S. Steel will remain in the U.S. and keep its headquarters in Pittsburgh, crediting his tariff policies for the investment. U.S. Steel today up 21%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Summer weekend is getting underway, although it's kind of like, cold here.
Yes.
I don't know why. That's New York for you. You know what that means, though, Carol?
Yeah.
Summer blockbusters.
Woohoo, woohoo.
Yeah.
And that includes the latest installment of Tom Cruise's Mission Impossible series, the movie already in theaters.
Everything you are, everything you've done, has come to this. You gave him an aircraft carrier?
Oh,
The
yes.
answer is yes.
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 The U.S. Navy and Air Force Special Operations decided to accept the mission. Yes, indeed. Help Tom Cruise's secret agent, Ethan Hunt, save the world, or at least make a movie about it. So here with more on how that all kind of came together. I can only imagine that conversation about how we're going to do this and how they helped Tom or Ethan in his mission. With us is Bloomberg News Pentagon and National Security reporter Tony Capaccio. He joins us here in studio, usually in D.C.
In the Pentagon in Virginia, and D.C.
How does this happen?
Carol, it's top secret, okay? Don't talk about it. Don't ask.
You're another one of those secret agents. I'm so convinced, all you guys down in D.C.
I look like a secret agent, which I am now. How does this come about?
Yeah.
So Tom Cruise has been remember Maverick, Top Gun?
Yes.
He's built up quite a reputation with the Pentagon. He's got a good relationship with them. Apparently, he treats them pretty well. And Top Gun was a massive hit. So this kind of a natural evolution. I don't recall this level of support in the past films. And Top Gun Maverick, he was in the backseat of an F-18. He couldn't touch anything, and they charged him a good chunk of per hour. But this one it seemed like a confluence of a circumstance where the carrier was on a deployment, kind of a training deployment.
Come on along with us.
Yeah, it was kind of like that. And it was a kind of a no-brainer if you're the Pentagon because it's a do no harm.
Right.
He's not doing any suicide missions off the plane or doing some reckless stuff that's going to make the public think, Jesus, this is what the Navy does?
Keep him away from pushing planes off of the aircraft carriers.
You know what? He'd probably be one of the guys dressed in either purple or red. These are the crew on the carrier, or green, depending on their mission, to help arrest the jet as its tail hook hits the wire. He'd probably be there helping pull the wire back in. He's that kind of a grunt from what I understand.
So, look, there's no such thing as a free lunch here, Tony. The Pentagon wants to get something out of this. They certainly got something out of it with Top Gun. And, you can look at the recruitment numbers. 1986, I believe, is when that movie came out. So it was the 39th anniversary earlier this month. What do they want to get out of it?
You know what they get out of it is showing the public that their massive investment in the Pentagon spends half of the discretionary dollar that the Congress approves. It's a hell of a lot of money. So this is one way you want to at least control how your image is portrayed and your equipment is portrayed and your personnel are portrayed. I think because they have control over that, the public gets a more realistic portrayal versus a Rambo portrayal of how the military operates. I mean, you could argue this is propaganda, we shouldn't be doing it. The other side of the coin is these filmmakers who would do it anyway,
right?
And they could make these soldiers, men, women, and the superheroes that they're really not in terms of the way the military is portrayed. So this way there's some control over it so the public doesn't think, man, they can do the X, Y, Z when there's limits on their capability and their training. But it's a more realistic portrayal for, I would argue, a somewhat benign amount of money or expenditure.
Does it look, these are global films now in a way that they weren't in the 1980s. And I'm wondering if there's also an element of I guess I don't want to call it soft power because it's not really, I guess it still is soft power.
No, that's a good term. Soft power. American blockbusters are soft power.
And that's why they've been sort of at this tension with the trade war. And the president has put Hollywood in his crosshairs and imported films. So is there any of that happening with a film such as this?
You know
hey,
what?
Look at us.
I think it's soft power in terms of if you see this film, and I haven't seen it, just to be upfront. If you're in Asia,
it just came out.
Yeah, it just came out. We didn't get a sneaker. We didn't get a copy slipped to us like a document, you know. But if in fact, to Philippines, people in the Philippines see it, allies we're trying to cultivate in Asia to counter China. You know, this is a relatively useful tool to show this is American power for the good, for saving mankind from an AI threat that I'm not sure how insidious it is, but it sure seemed like that from the movie.
If it wasn't Tom Cruise, you think this would have happened?
Say that again?
If it wasn't Tom Cruise? It sounds like he's got such a great relationship with the military, the American military.
He does have a good relationship. He was down in Fort Sam Houston there yesterday talking to troops. He's showing in the movie, and I know this because some of the Pentagon officials who were involved in helping with this movie were down there escorting him.
I love when you guys include in the story Top Gun Maverick. The Navy was paid as much as $11,374 an hour to use its FA-18 Super Hornets, which to me sounds like a deal.
It's a deal. He was in the back seat. You know, he wasn't flying the plane. But these were not on training.
Got it.
These were actual mission, the actual use of it, not in the training. Not in training.
Got to run, Tony. Thank you.
listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
Are you going this weekend to the movie?
I got other things to do.
Really?
I want to be outside.
What are you doing?
I'm tired of being inside. I want to be outside, even if it's a little bit cooler. I want to be out in the fresh air.
Weather, New Jersey.
What?
All right, you got a high of 64 tomorrow and a low of 51.
Who says I'm going to be in New Jersey?
I turned. Oh, really? Oh, okay. I don't know. I don't know what it's like to be Carol Massar.
I got the F-15 like firing.
Wow. Carol's going to go jump on the F-35.
Me and Tom. Yeah, exactly. No, exactly. Not going to happen.
Tony, bring Tony.
Oh, man.
Tony Capaccio.
I have a new favorite reporter at Bloomberg. Sorry, everybody.
Usually based in Washington, D.C. He's holed up in the Pentagon. It's a secret.
So
cool. It's a secret.
Another private.
Here.
Another agent.
In New York
No, I'm
City
just kidding.
today.
Yeah. What?
For a very cool conversation.
We're just so lucky.
We are so lucky.
I mean,
wow.
Got Kevin.
Yep.
Right? Like talking Europe. Okay. Anyway, I'm Carol Massar along with Tim Stenovec. So a lot going on this past week. Let's take a look at some of the stocks that had some significant moves this past week. With us to do that is Christine Aquino, managing editor of Markets Live here at Bloomberg News. Christine, let's start with Moderna.
Let's start with Moderna. Of course, we know that we got vaccine guidance from the FDA this week, and investors were actually viewing that as better than expected, right? We got that article in the New England Journal of Medicine from the top officials at the FDA, their vaccine czar, if you will, and basically the article said that they're not necessarily against COVID vaccinations for adults who are over 65 and for anyone over the age of 6 months who do have comorbidities. And so Bloomberg Intelligence's own Sam Fazeli saying that guidance might actually increase the uptake of shots, encourage people with comorbidities to go and get it. So yeah, Moderna up 5% this week.
Yeah, they were kind of tossed around, right? Because I think there was concerns and then the good, like better or not as bad news, as you said. So interesting to see. They were one of the top gainers in the S&P 500 this week, Tim.
All right. What about Dollar Tree?
Dollar General, I should say.
Oh, Dollar General.
Yeah, Dollar General. So Dollar General actually not necessarily gaining because of news specific to that company, but because on Tuesday, Walmart said that it will raise prices in order to combat tariff-related headwinds. And so where would people go if things get too expensive at Walmart? To the dollar stores, right? So I'm sure Dollar Tree also got its own lift from that. But yeah, Dollar General, one of the best performers in the S&P 500 this week.
Number 2,
8%,
yeah.
Exactly, yeah. And yeah, again, it is very much a tariff play, right? Investors are betting that move by Walmart could push customers to seek cheaper alternatives, and Dollar General is going to be one of them. And, you know, analysts at KeyBank also looking at some early data ahead of its results on the 3rd of June, and shows that there's strong spending from customers of Dollar General in April. So that bodes really well. You also had Morgan Stanley raising that price target to $85 from $80 previously.
Wait, what did they do?
They raised their price target to $85 from $80 previously.
It's 101 and change.
Okay, so maybe still at a discount.
Well, it's for a year out, right?
Yeah. So they're
and what's their rating?
They'll
Is
still
it a
be
hold? Is it a buy? Is it a sell?
Coming in hot with the hard questions.
I'm just saying, if you're expected to go down,
that's not great, but maybe they're expected to go down less than other competitors.
I just like having fun with
It's like glass half full story, Carol.
You're not getting Uggs at Dollar Tree or Dollar General, Carol.
I am not, but I am at Deckers.
That's the parent company of Teva, Hoka's, and Uggs, Carol's favorite.
I love Uggs. Who doesn't love Uggs?
Not a great week. Uggs are very comfortable.
Come
not
on,
a great
Christine,
week.
you have Uggs, right?
I do not have Uggs.
Blasphemy.
I'm so sorry, Carol. I mean, I would love a pair of Uggs, but yeah, I don't happen to owe them at the moment. But yes, they did not do well. The owner of Uggs and Hoka running shoes down more than 20%, 21% this week, actually. And that comes after a disappointing fiscal first quarter forecast, a bunch of firms also cutting their price target for the shares, management declining to provide full year guidance because of macro uncertainty related to global trade policies, which got even more uncertain because, of course, we got those headlines early this morning. President Donald Trump threatening tariffs on the EU as a whole and also Apple specifically as a company.
Kind of interesting. Yeah. One of the biggest decliners in the S&P 500 this week. So definitely a big bite out of that one. What an interesting trade this week.
Yeah. I mean, there's been a lot that's happened.
Yeah.
Definitely trade tensions back in the limelight. And, it's only going to get worse because there's a lot of volatility. There's a lot of uncertainty there,
Yeah, we definitely saw it play out. Christine, thank you so much. Have a great weekend, great holiday weekend. Christine Aquino, managing editor of Bloomberg Markets Live. For more conversations, check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers in the stock market. You can find it at Apple, Spotify, or anywhere you get your podcasts.
2.6% to the downside, Carol Master, for the S&P 500 this week.
Yeah, right? I mean, it was an interesting week, right? We've been talking about it being a little bit boring and stuff, but I feel like there was a fair amount of stuff.
Today was
from the get-go.
Very busy.
Going back to this is when I like to go and take a look at Reed over the past week and just see, let me just see, if you take a look at 1 week, like the budget bill, SALT, like there was
the Harvard news.
The Harvard news, just so much going on. And then again, another, kind of tariff amping up on this Friday. Can you tell we're tired? We're a little tired. Hey, listen, we just want to remind everybody that we have a weekend podcast. You can catch it at 8 a.m. tomorrow on Bloomberg Radio. You can also catch it on our podcast feed, so be sure to check it out. We also do want to remind you that none of this happens without an incredible team behind us.
We got a great group of folks helping make this work. The mistakes are ours. Everything we do well,
they're Tim's,
is because of them. Anthony Mancini, Colin Tipton, Steve Lanzone, Meredith Frank, Sarah Livesey, Justin Milliner, Avalon Purnell, Cece Charendoff, Elizabeth Sedrin, Ari Lagami, and Sebastian Escobar.
In the house.
Who else is back there?
Did I forget anybody?
Yeah, we did.
I'm sorry. If we did, thank you. We really appreciate it. Truly, truly. Have a good and safe week and holiday weekend. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew. Tonight, a presidential tariff threat.
Right now, it's going on June 1st, and that's the way it is. No, they haven't treated us properly. They haven't treated our country properly. They banded together to take advantage of us.
The reaction today after President Trump threatened a 50% tariff on the European Union while promising a 25% levy on Apple if the tech giant does not move iPhone manufacturing to the U.S. We'll get into those market-moving words from the president and their impact up ahead.
This as other trading partners race to negotiate deals with the U.S. as the window to do so shortens. Treasury Secretary Scott Bessent giving Bloomberg a glimpse at what we can expect and when.
We've done a deal with the UK. My sense is over the next couple of weeks, we're going to have several large deals announced.
More from that interview coming up. Plus, U.S. steel surges as President Trump announces his backing for a partnership between the company and Japan's Nippon Steel. We'll have the details.
Also tonight, a look at where a fifth round of talks with Iran stands as the Trump White House outlines a requirement of any future deal. We'll discuss those talks, a potential path ahead, and more.
And a legal win for Harvard. A federal judge granting the university a temporary block on the Department of Homeland Security's ban on foreign students that was announced just yesterday. How that case could play out and much more tonight.
But we begin tonight with the fresh wave of tariff threats emanating from the White House after the president floated a sweeping 50% tariff on the EU starting next week and a 25% tariff on Apple if the tech giant fails to move iPhone manufacturing to the U.S. Bloomberg's Wendy Benjaminson joins us right now with more. Wendy, welcome. Is there a strategy here? Because the market doesn't seem to be feeling it.
If there is a strategy, it is known only to one man, and that is President Donald Trump. I mean, just when it seems like the one thing we can count on with Trump, especially in the second term, is chaos upon chaos being the one certainty. So just when we thought the chaos was over, that Liberation Day had settled down, and that he was now going to take those really scary tariffs and negotiate deals with with various groups, including the EU, that then, you know, there would maybe high tariffs, but there would at least be some sense to it. And apparently he didn't like what he was hearing from the EU. Howard Lutnick, the Commerce Secretary, who Trump listens to very closely, had sort of thrown up his hands about the EU and said it's going to be impossible to make a deal with them. Trump seems to have taken that to heart, and this morning smacked a 50% tariff on them and now says that's it, talks are over, it's a deal. Interestingly, a senior Dutch official said, it's just him negotiating, we'll be fine, we'll work it out. That may be, and that may be a tactic on the Dutch official's part, but, you know, it's, we just don't know.
Well, I guess we'll find out come next Sunday, at the very least, June 1st, when this is supposed to kick in. In the meantime, Japanese officials were also here in Washington today, actually negotiating with Howard Lutnick, who you mentioned. So what timing for President Trump to announce that Japan's Nippon Steel can, in fact, partner with U.S. Steel, not buy it outright, but invest $14 billion into U.S. steel manufacturing after the completion of a CFIUS review. What do we know about this, Wendy?
Well, we don't know exactly what the CFIUS review came back and said, but they must have assuaged the concerns that the Biden White House had, that there would be national security concerns if Nippon Steel was allowed to invest in U.S. Steel, which is what the Biden White House had objected to in this merger. But, you know, Trump has shown us numerous times now that national security concerns can be set aside if indeed he can, you know, make money for the U.S. or get more investment in the U.S. for it. So he apparently has set those aside, and Nippon Steel will invest in jobs and, you know, revive the aging infrastructure that U.S. Steel has in Pittsburgh. Apparently they've promised to keep the headquarters in Pittsburgh. The United Steelworkers, however, are not happy about this. They are very concerned that Nippon is going to slash jobs, bring in their own people, do all these sort of things. And there is no guarantee that that's not going to happen, and it's unclear from the White House.
Nothing is guaranteed.
Yes,
it
nothing
seems.
is guaranteed.
Bloomberg's Wendy Benjaminson, thank you so much, as always. Now we want to